So welcome everybody to another episode of Executive Republic's Future Proofing Your Business. We've drawn on a pool of our experts. We can't know everything, but basically what we've got is a vision to support our business community, basically, and we want to be able to add some value and ensure that people are doing everything that they can and understanding everything they can that affects their business to help them to be thriving rather than just surviving. So today I have with me, taking up our second conversation, we'll go a little bit on what we talked about in our first conversation, is Danny Mazevski, who's the founder and principal of AMCO Tax. Danny, the list of acronyms behind your name, CPA, FIPA, FTIA, FTMA, Diploma of Financial Services, an executive MBA from Sydney Uni, a Bachelor of Business in Financial Services and Accounting. Is that right? And
that is right. Very kind of you, Laura. Thank you.
I did talk about it last time, but I'm always, whenever we catch up, you're impressing me endlessly about, and you've even motivated me to take some extra learning on this year. The amount of effort that you have to put in outside of just running your business and servicing your clients is incredible. What you guys have to keep up with, and yeah. You're a fountain of knowledge, and you should be with all of the reading and that sort of thing you do. So thank you for joining us again. We're going to talk about some great stuff today, and with the budget just having been issued recently in the last couple of weeks, we're going to be talking about what we should be aware of and what to prepare for. Make sure that we understand everything in a bit of a summary, if that's possible. There's a lot to do. So welcome, Danny.
Thank you, Laura. It's a pleasure. Now, most of you would have picked up on the fact that the budget was handed down. It was handed down late. It should have been handed out in May, but they deferred it till October. And something to note that the budget will be handed in May again. So we're going to be blessed with another budget within about 7 months. And there's still a high level of uncertainty, I think, in the way Treasury and the Reserve Bank and APRA, basically, and the government, I guess, as well, is looking at the economy and saying, is it going to be okay after March? One of the key things that happened in the budget is they basically said, look, we'll be okay long term, but we feel that if we take all the stimulus out by about March, it may not fire up to where we want it to be. So one of the centerpiece in the budget has been this massive, well, I would say massive, but quite spread out tax cuts, and even backdated back to July 2020. They were originally going to be handed down in the next few years, but they've actually brought them forward in the hope of carrying the economy after March when the stimulus gets pulled away. Just some things to reflect on. There is a nice little summary of the whole budget on our website under Knowledge Centre, so I'm not going to go through in a lot of detail, but what we'll do is we'll just pick up the key things that were handed down in the budget. There's some interesting superannuation reforms from July 2021, and basically, in a nutshell, the government's looking at setting up a nice little system where they can monitor the effectiveness of the different superannuation funds. When I say effectiveness, I mean in terms of what they earn, the earnings over 3, 5, 10 years, and also the cost that they charge relative to those earnings. And the idea behind this proposal is that the government will then turn around and say those funds that are not performing in terms of cost versus earnings, they will basically then mandate to even stop members joining those funds as a starting point, and then if the performance or lack of performance continues, they could even force them to amalgamate and merge with other funds, because there's the idea is that there's a lot of small super funds that are set up. No disrespect to the unions, but a lot of them have been sort of set up in very small funds, and they're not really performing as well as they should compared to their large counterparts. So that's an interesting approach.
Super interesting, that one. Have we ever had that coming from a mandate from the government?
They sort of came close to it, I think, few years ago, when I think it was Morrison and a number of other guys went to the UK and US and everywhere else, and they found that the fees and the performance of some of the funds here are sort of not where they should be. And the problem with that, of course, is a lot of these small super funds are very patriotic. They like to keep their identity, but the reality is they're not serving the best interest of the members. And unfortunately, a lot of the members that are in it are disengaged from the advice process. So they don't really understand it and look at it. So they get really, I hate to use the word, taken for a ride over many, many years, that they're not performing in their super. But until they see a financial advisor, which most won't see because it costs money, then they end up compromising their whole life. So the government's taken a very proactive thing to say, well, we'll do the job of an advisor, if that makes sense, and we'll shape these funds up. So that's something I think every person must have a super fund somewhere, perhaps even multiple super funds. It's a wake-up call. Don't wait for the government to do this. You should probably look at your super funds. And we all know government's going to move very slowly. By the time they pass this through Parliament, by the time they unfold it, it's going to probably take quite a bit of time. But I think it's a step in the right direction for people's financial future. To have them mandate no members in funds that aren't performing, and then to force them to actually amalgamate, I think it's a big reform.
That's super encouraging, isn't it?
Yeah.
And like you say, people getting aware, and the reason why they get away with it, I guess, is because people who don't have that knowledge. And going back to last discussion, if I may just talk about, that was one of your key points of if you do 5 things, that's actually get a really good tax advisor. Whoever it is, they need to know your whole situation. Really.
Just rather than completing the compliance bit. And the other thing, that the ATO will be charged with what they call stapling the super to the member. So at the moment, people might have 3, 4 super funds. So rather than having that, they will then sort of try to consolidate it to one. And where individuals are changing jobs, the priority will be, because it's linked through the ATO, not to open up a new fund again, which has been the case in the past. When people change employment, employers or unions have had their own agenda, and then they push person into a 3rd fund, for example, and a 4th fund. And most people are just complacent. They haven't worried about it. But the legacy then is multiple super funds, multiple fees, multiple waste of financial future. So that's likely to. So that's quite a reform that's looking at being put in place from 1st of July. So I don't know how quickly that's going to roll out. Now, just something to note: everything that I've said in the budget, and we qualify that in our summary on our website, is really proposal by the government. It's not legislation yet. It needs to pass through the get the royal assent through the government. But at least you're getting the heads up as to what they're putting on the table to pass through Parliament, and then eventually get that passed. And anything that we put across, obviously, is general advice today. So if there's anything specific anybody needs, you're always encouraged to see a tax advisor or a financial advisor, so that they can actually see exactly what your needs are. This is just the general advice of changes that are happening that people should be aware of. So that was one of the key things. The other one I mentioned was the personal income tax cut. So you'll start seeing that coming through for the rest of the year, and that's actually backdated to the 1st of July 2020. The government did that simply to prevent the economy faltering after March next year, when all the stimulus comes out. The government won't be putting any more support or very little support. So their idea was, in case the economy does not fire up and get back to normal, they've backdated these tax cuts that were due to come in the next few years right back to July. So people should start getting a bit more money. But then there's this level of thinking now that most people are so cautious this year with everything that's happening in the environment, that extra money may not be spent anyway, it might be saved. So that's the other sort of counter argument, that the government's sort of worried that people aren't going to open up their wallets as easily as they would have done in the past. My personal view is that could be the case. I think most people are still sort of quite anxious about where the future sits, so they may end up pocketing those money and not spend it.
What would you say in terms of a business that is employing staff, how administratively challenging is that retrospective change? Does that affect businesses as well in terms of the withholding process?
Yep, it does. One of the
Yep.
things everyone's probably aware of by now is the single Dutch payroll that businesses would have had to set that up through their payroll systems, through a compliant system. So the providers of that software are actually working through those changes now to make sure that all of that's in there. And the other thing which wasn't really noted in this budget paper here is that extending that single Dutch payroll for child support agency kind of reporting and stuff. So all of those changes are going to be implemented in these systems. Right. So to answer your question, the normal payroll systems that they're available there should accommodate these changes without too much difficulty. But it is, it will bring a few extra dollars. And there, again, I won't go through the detail of what the savings are and how much they're going to be. They're fairly modest in the sense when you look at it here. They basically range to about up to a couple $1,000, but if you roll that out across the whole economy, it does sort of give a bit of a cash flow boost. If that makes sense. So that's one where it should sort of excite people to have a little bit more money coming into their pocket. They also announced the change. There's a lot of informal arrangements with people setting up with their parents and in-laws setting up granny flat arrangements, not documenting them in the fear that if they documented that they're going to cop capital gains tax. So the government's looking at relaxing that aspect of it so people can actually formalize and have a granny flat arrangement in the back of their homes to accommodate their elderly parents. And without intervening or without sort of impacting capital gains tax. And that has come about because a lot of these informal arrangements have ended up having big estate planning problems later on because they're not documented. So I believe that's a good thing. It's a needed thing. People are getting old and, we're all getting on in life and we need that level of comfort that will be taken care of.
Is there a caveat on that, whether if it's an income producing sort of investment or an extra to your property, is there a caveat on that, or is it just basically for granny flats in general?
Just for granny flats, because the minute you start developing your home and you're adding up granny flat arrangements, whether it's for investment purpose or anything other than private consumption, then it starts to open up the capital gains tax potential. And a lot of people, as I said, have just kept it sort of under the radar in the hope to sort of not get picked up on the capital gains tax. But it does add problems later on when there's estate planning issues that you've built this and there's nothing noted in the wills and you get all sorts of challenges afterwards. So I think that's a good thing. The government's realised that look, we've got a housing shortage, we've got sort of accommodation shortage. And if they can formalise it and give a bit of level of comfort, people are more likely to sort of openly document them and tidy that up.
Interesting.
There was a little bit of expansion on the asset write-off as well. The 150,000 by December, it's got to be purchased by December 2020, but that's been extended now to businesses with turnover up to $50 million. Between 50 and 500 million. So quite large businesses can actually take advantage of it. Previously it was really targeted to the small end of town, but they've actually pushed it across to the larger businesses. So that I think is a good thing. More importantly, I think there is a huge initiative there with a temporary, what they call a temporary loss carryback. And essentially what that is during the pandemic, if businesses have made losses, but in the prior years they've actually made gains and they've paid taxes, the government's sort of saying, well, yes, you can carry back these losses back and ask for an adjustment and get some tax back. And the idea there, of course, is the government saying some of these businesses are worth rescuing. They were good businesses. They made money before. They've just had an unfortunate hit now. We really want to support these guys to survive and come out at the other side rather than fall over for reasons that are outside their control. So I think that's a good little thing that can actually carry back the loss. And if they've paid tax in prior years, they can actually get some of that tax back to help them with their cash flow to move across and get to the other side, basically, So the temporary loss carryback, that's a good little initiative.
Yep.
The employment measures is in there as well. The government's taken a very sort of, I suppose, concerned look at the fact that the unemployment may increase, and a lot of it may be the lower sort of younger demographic, and their idea then is to say, well, if we can offer some sort of support measures there to actually get these young people back out of the unemployment or new start into employment. They've got a program where they've got weekly credit of $200 age 16 to 29 and $100 30 to 35. So they're really targeting a lot more of the money between the 16 and 29 to make sure these people that normally would have been working in hospitality and tourism and those kind of places that employment's dried up, to actually get them back into the mainstream workforce with some sort of support to the employers. Unfortunately, it's not. Yeah, so that's, to me, it's a good little initiative. Again, really building some bridges. They're trying to build as many bridges across from where we are now across to come back to sort of a normal running, if there is such a thing later. And then there's a number of other measures on parental leave work tests, relaxing some of those. So it's good to people that need that aspect that can check that, and housing affordability, extending the first home deposit. So basically that there's some measures that they've put in there as well. So these are the sort of announcements. They're not law. They're progressively going through Parliament. We suspect that most of them should pass. I don't think the other side of government will be questioning any of the support measures, because they're really helping people get across this uncertain sort of difficult time where things aren't running the way they should have run.
That's very interesting. A nice little quick summary. It saved me watching the old Treasurer banging on for a couple of hours. As you well know, this isn't my area of expertise, and this is why I love talking to you about it, because you just help me with those little tips that affect me and potentially and other businesses. So with your clients, because you've got such a broad stretch of different industries and that sort of thing that you're connected with, even personal private businesses, people as well. What has there been a reaction or a response that's concerning, or do you feel like this is actually helping people to get off their hands, become a little bit unfrozen, if you like? It's not the ideal word, but that's what people were waiting for this budget, weren't they, to see what was going to happen, the announcements around the recession. Is it really impacting us like we anticipated, do you think?
Look, I think you're right that they were waiting, because, I mean, it was supposed to be handed down in May. And like all things, when things are delayed, people sort of naturally think, things are worse than they are. It's just human nature. I think, I think most of it was well received. In fact, even with the big spending, the dollars that have been thrown at this, I think we're seeing total debt, gross debt, for the first time get over $1 trillion. They're expecting it to get over $1 trillion. I mean, we all were worried in the past when the debt limit had to be increased. It was, from my memory, I think it was 200 odd billion, 400, then it went 600. Josh said 600. Mate, we've gone way past all the limits that we had before. And my thing is that people basically, when they see that sort of thing, they realize that, hey, maybe we are in for difficult times. There's a lot of money that's been thrown at this. And the rating agencies of the world, the Standard & Poor, Moody and Fitch, they're basically still giving it a AAA rating to the country. So they obviously still have confidence in how we've managed financially and health-wise as well. For all the criticism that gets thrown around, we've got a very diligent approach in terms of finance and health. And I think the world is noting that, so I think that part should work well, but you can't help to think that during the short period of time, I think we're going to have unemployment pull up. And they were sort of saying unemployment should peak somewhere 8-9% with what they measure. But then when you look at QBE's little numbers in it, its effective unemployment rate is 11.25. So it's a flexible number that not everybody measures it the way they should be measuring it.
Yeah.
And I think most people generally know that things would sort of deteriorate a little bit more before they start sort of getting better, because of the fact that a lot of the support is going to get pulled out. It needs to be pulled out because there's a limit of how much money can be applied.
Yeah.
So that's why I'm a little bit, I suppose, cautious about these tax cuts. They may not be all spent. As much as we're heading towards Christmas and people want to spend money, I think in general, most people are sort of maybe putting money away, and that's reflected in how the loans are being paid out, credit cards are being managed. So I think the banks in general are saying that people are a lot better, lot more disciplined than they've been in the past in terms of putting a few dollars aside.
So that's a good thing, right?
Yeah.
In a sense, but for the economy, it's not so great.
No. That's so that was the budget. And the other thing I wanted to sort of just put up is the QBE. Again, it's not advised, but QBE does a great little job in summarizing where the whole property markets have been across the different states, and key statistics. And that's something we're going to leave on our website under the Property Knowledge Center as well. So for all the property passionate clients, I guess, and small business guys that believe in sort of putting a bit of money towards property in the long term, it's good little information to have a feel for where things are sort of going in a broad sense,
Yeah, absolutely. I think everything, when we talk about the worry in the future and the people, the hearsay and the they say and all that sort of thing, when you actually see things in numbers and data and it's there in black and white, you get to see the real impacts. And whether it has actually turned out like we thought it was is sometimes for some of my people that I'm talking to is that it's not. They're doing a lot better than they thought they would be at this point in time. So that I'm not dismissing that some people have been really challenged. It's just nice to see some people are actually doing well, and the rate of innovation and people being really creative with their businesses and trying new things is quite exciting as well.
And you know what? It's interesting. I mean, we've got the borders closed, so a lot of the dollars that were going to be spent offshore are actually being spent locally. You see, so that to me is a good thing. But then on the flip side, you don't have as many people coming in to have a demand for the housing that we've had in the past. So that has an impact. So really, the waters aren't very clear where you could do a very clean cut and say, well, this is where it's going to go, because there is just significant forces working on both sides of the, because they would have had X amount of dollars, people moving overseas over Christmas, seeing people. So all of that is really local spending now.
Yeah, the comparisons aren't the same.
Yeah.
It'd be very interesting to see once borders open how our prices change for property and that sort of thing, and see if how many people actually want to come and live in Australia after watching us for so much. I'm thinking about that.
Well, and just again, just reflecting on some things that are working around the world. I mean, we know that Hong Kong's undergoing that transitioning now, and a lot of the wealth in Hong Kong is potentially looking for other centres to set up as financial hubs. And Singapore is one option, and the other one, believe it or not, is Sydney. So there's a lot of lobbying from senior heads from Australia, lobbying for that position to actually bring the financial centre here. And the only thing is our tax rates are still a little bit higher than where they are in Singapore. So if we as a country sort of take a deep breath and become a little bit more competitive, pull those rates down a bit, I think all the other stuff we've got going for us, clean environment, great legal framework, great little structure in terms of how we execute, the whole systems and stuff. And most people will be happy to bring their wealth here. So that's a good thing as a country. I mean, if we can sort of develop the financial center. There's an article written by one of the US guys saying, well, I sort of forecast, he said, the new Switzerland will be part of this world here in the future, because basically you guys have a very interesting framework. And we've proven time after time that we're very sensible how we execute. As I said before, whether it's financial or health, we have a very structured approach and very transparent approach. And we're not afraid to take knowledge from anywhere around the world and implant it here. So we're a young country, but we're bringing all the best ideas from the rest of the world.
Yeah.
And I think that's encouraging. I think we've got a lot more going for us than we think at times, you know?
Yeah, because it's not the first time we've proven that, is it? With the GFC,
Yeah.
we sort of did really well as also, didn't we? So should we go through a little bit of a summary then, wrapping up, because, you know, that's a lot of information for people. I just wanted to just share that. I'm just going through here. Here we are. We were ending off at starting off at the end there. That's the link for where you've put our last conversation as well, which we talked about, and giving your tips around what you should do is in terms of a basic approach to your financial support. But today's information will be summarized in the back of your website in the Knowledge Center, which I'm sure you've got a whole lot of other stuff, as well as you've got the QBE report that you mentioned, a summary of that, so people don't have to sit there and fall asleep reading reports. You've done all of that for them, which is fantastic. So I'm just going to go back a little bit. The key points from the budget, which is what you went through. Just for businesses, I guess, and people, you know, individuals, to understand and prepare for the super reforms, because, you know, what does that mean for businesses really? You know, they've got to prepare to put aside an extra amount of money in terms of their super for businesses and budgetary and cash flow. Is that something that will affect them?
And personally, I mean, every business owner must have their own super. They may even have a self-managed fund, for example, but a lot of them would have normal super, sometimes even in multiple accounts.
Yep.
It's a good time to sort of have a quick reflection on that and sort of say, okay, well, where is it? What's it done in the last 3, 5, 10 years?
Yep.
And how does it compare to the market? Because eventually the government will do that over time, but it's probably a wake-up call to have a look at it sooner rather than later, because obviously it is an issue if the government's looking at making some mandated changes in there.
Yeah, and it's, I mean, July 2021 sounds like a long way away, but at the rate we're sailing at the moment, it's going to be here before we know it. The backdated personal tax cuts is something to understand. The impact of the changes to the capital gains tax with the granny flats and things like that. Expanding that tax write-off, where the big guys get to enjoy some of the announcements for a change, which is fantastic for them. The temporary loss carryback, which is also an advantage for people too, would you say?
Yeah, well, I mean, businesses, there will be some that would be temporarily held back. I mean, there will be people in tourism, for example, leisure cafes, for example, that would have paid tax last year and the year before. And all of a sudden they've had a bad year where they're in loss now. Now, they need cash. So it's good for them to pick up their previous tax returns and just have a bit of a look to see how much money can come back with this initiative, because that's real dollars coming back, cash flow in their business. Well,
that might be a little motivation for them to look at, for all those businesses that have been challenged through this time, and the employment measures with the support and the subsidised, for the youth. The ages is it 18 to 29?
18 to 29, and the other one is to 29 upwards to about 30 something, I think it was, and that's only $100. So primarily it's targeting the youth to actually get them back into employment. Because
there's a lot of very skilled young people that can help businesses as well, so that's a great incentive. And then you've got the summary that you've got for the QB housing, the housing snapshot. That was the report. It was called QBE Australian Housing Snapshot, and you've done the duty of reading that whole report. How many pages was it?
No, I don't want to say, but I've only taken four pages out of it.
So you've done done the grunt work for us there, which is fantastic. So that really is all we need to go through for today. We'll pop this up and we'll have access for all of our business community. If we are just helping, one or two people each time we speak and share our information and bring you on here, I'm a happy person, so I really am grateful for you sharing your time and your expertise with us. As always, it's high value, and we'll see you again in a few weeks. You're going to come and share some things. I've got a few ideas of what I'd like to talk to, but we'll take that off air. Maybe we might look at maybe considering how, you know, sort of lending and funding might be able to help you in your business growth strategy, or think that something like that when people are thinking about next year, kicking off the year, and that might be our last one for this year for you and I.
And we're into Christmas.
Yeah, I know. It's insane. So thanks so much, Danny. A copy of this will be up on our website. The summary is in the back of the AMCO tax.com.au knowledge centre. So thanks again, Danny. We will see you in a few weeks.
It's my pleasure. You have a great one, and everyone have a great time. All the listeners, really appreciate it.
Yeah, thanks, Danny.
Thank you.